Hey everybody, thanks for joining me again today. It's Friday, so that means it's time for another episode of Trucker Money, where we talk about everything outside of trucking. Building a lifestyle outside of trucking, earning extra money, everything we do to earn extra money and investing so that one day we can maybe have that great retirement we've been planning for. So every week before we get started, I like to kind of talk about, maybe give a little information or lesson on something. And this week we're going to talk about rental real estate. Something we haven't talked about yet, not very much anyways, and 5 different ways you make money with that. Everybody knows about, of course, collecting rents, but there's some underlying ways that, in my opinion, get overlooked too much that make this a really valuable asset class that probably has built more wealth in this country than any other single asset class. So let's just start here by taking a look at 5 different ways you make money in real estate with rental property. And then I'm going to give you a bonus item here today. So the first thing everybody kind of knows about is cash flow. You collect rents. If your property is mortgaged, hopefully the rent you're collecting is more than what your expenses are. Everybody kind of knows about cash flow. Equity capture. Now this is a good one. So say you buy a property and you do a little bit of a remodel. You buy a $100,000 property. You stick 50 into it. All of a sudden it's worth 170, 180. So you get captured $20,000 to $30,000 worth of equity during that process. That can put money in your pocket a little later should you ever decide to sell or whatever, in case you want to borrow that equity back out to put it as a down payment on another property. Therefore, theoretically, you're buying that next property with no money down because it came out of this other property. So there's a lot of flexibility and things you can do with equity capture. The next thing is market appreciation. So you buy this property and it goes up in value. Therefore, once again, you're gaining equity. Kind of in a different fashion. This is just through strict depreciation. This is something you did to cause that equity to go up. So with that appreciation, like I said, you can borrow it back out to other properties. You can just leave it in there, whatever you want to do. But it's a nice part about market appreciation is it's non-taxable until you do something to trigger a taxable event, like sell it. Therefore, adding to your net worth. The 4th one, principal reduction. So all the time you own this property, your tenant is paying you rent. You're taking that rent and making the payment on it. It's paying down that principal. So you're gaining value every month through that. The next thing is depreciation, and in relation to that, taxes in general. So depreciation is more or less a paper loss, but it is valuable because you're not paying out any money to make this depreciation happen. Depreciation is, say you buy a property for $100,000. Well, on your taxes, you can take that $100,000, take the value of the building, and depreciate it over 27 years. Or different years depending on a different type of property that you buy. But most residential real estate is 27 years. So you'd take the $100,000, put it on a depreciation schedule, and every year you would take $2,000 to $3,000 off of your income because you have this depreciation. So you would be basically not paying taxes on $2,000 or $3,000, however much you choose to depreciate it. And that continues on until the property is depreciated down to 0. So you save taxes that way, as well as there's the same tax benefits you would get with any other business, business use of your vehicle, things like that. Now, for the bonus thing I'm going to give you. So, say you buy a $100,000 property and you hold it for a very long time, or you don't, whichever way. Say you buy it and you're going to flip it. You buy it for $100,000 and you're going to sell it later for 6 months later or a year later for $150,000. So you would have a $50,000 gain there, the difference between the two. Or in this case, you buy a $100,000 property and you keep it for 30 years and you've depreciated it down to 0. So when you sell it for $150,000, that whole $150,000 is going to be a capital gain. Well, there's something called a 1031 exchange. It's part of the tax code. In 1031 exchange, you can take the sale of that property. So say you've had it for 30 years and you've written it down all the way to zero. You can take those proceeds from the sale, and you'll need to work with a tax person on this and a bank probably. Put that money, never take possession of that money, put it into an account, and then you have so many days to roll that money over into a new property, and it does not trigger any taxes at all. So in theory, you know, if you just flipped it, you just had a $50,000 tax-free gain, and if you kept it all those years, you were able to take the depreciation all those years as a tax benefit, sell the property, do a 1031 exchange, and never have to recapture that depreciation and pay taxes on all that $150,000. So a 1031 exchange can be a really valuable tax strategy, and people do it every day in this country. People will try to convince you that it's only for the rich. It's not. It's for people like me and you. Anybody can do it. So it can be a really valuable strategy if you're... Now it has to be a like-for-like real estate exchange. It has to be rental property for rental property, or commercial property for commercial property. Something like that. There is rules that go along with, but it's really not that complicated. So now let's get into what we did for this week to earn extra income, or any extra income we had come in, and take a look at all that. So for the week of July 6th through the 10th, Duke Energy, see the big smiley face right here? That's me. That's what I look like right now. Duke Energy raised their dividend by 2.12%. Boy, I love getting a dividend increase for doing absolutely nothing. It's kind of like when you come home from work and your wife's got a great meal made and gives you a foot rub, and you get to watch football all night, and you say, "What did I do to deserve this?" And she's like, "Honey, that's just for being you. That's how much I appreciate you." That's what Duke Energy just did for its shareholders. Dividend increase of 2.12%. So we really like to see that. Makes me happy. Who paid this week? Well, it's a slow week. July is always a slow month for me. Ticker symbol MO, M-O. That's Altria. Altria is, you may have years ago known them by Philip Morris. They make cigarettes. They own 10% of InBev, Budweiser. They own the Juul brand of smokeless tobacco, or smokeless products, I should say. Current yield of 8.7%. What did I buy this week? Well, Royal Bank of Canada, current yield of 4.76%. Verizon, current yield of 4.56%. Southern Company, current yield of 4.93%. And picked up just a little bit of Prudential because it was down in on sale, current yield of 7.58%. So that's just kind of what I did this week. I'm not advising you to go buy any of this. This is only strictly for inspiration and motivational purposes, to kind of get you to get out there and think about what you can do to earn extra money to make your lifestyle more resilient. So next time we have a big economic downturn, maybe it won't hurt so bad if you have multiple streams of income coming in. Just some food for thought. So thanks for joining me today, and join me next time for the next episode of Trucker Money.